The Trump enthusiasm continues on Wall Street. The Dow Jones closes above 44,000 for the first time, while the S&P 500 crosses 6,000. Bitcoin soars to new records and is nearing $90,000. Stocks in the Asia Pacific are mixed, with investors exercising caution even as post-Wall Street election rally continues to gain momentum. The GIFT Nifty is also indicating a subdued start for our own markets. Oil prices fall after China's latest stimulus plan disappoints investors. A stronger dollar also weighs on prices. Brent crude is now down 6.5% in 3 sessions. Gold prices are also easing. Hindalco reports a good second quarter as aluminum business beats estimates, while Britannia revenue growth was over 5% and it is the second quarter of 8% volume growth. And India's October CPI will be announced later this evening at 4 p.m. CNBC TV18 poll sees the headline CPI at 6% compared to 5.5% in September, while industrial production for September is expected at 2.36%, much better than the August reading. Good morning, you're watching Power Breakfast here on CNBC TV18 in the Mumbai News Center. I am Hormas Fatakia. Let's first take a look at how the Asian markets are doing this morning. While the party is continuing on Wall Street post Donald Trump's election win, it's not quite the same for the Asian markets because they are trading with a tinge of caution. The Hang Seng just trading above the flat line, but the Taiwanese index is trading with losses of over 1.5% as we speak. The Japanese index is trading with gains of close to 1%, and that is because some political stability is now anticipated after Shigeru Ishiba was voted by the parliament to stay in power as prime minister. And the Shanghai Composite 2 is trading above the flat line with gains of around 0.3%. Negative returns coming in from the South Korean markets. So overall, a mixed picture coming in from the Asian indices. Pull up the GIFT Nifty as well, and absolutely flat as we speak. A 10-point uptick so far is what the implied open is suggesting. So a cautious trade in Asia Pacific, and the Indian markets are also likely to start off on a cautious note. But the Wall Street party is continuing, particularly on the Dow Jones after it gained more than 300 points to close above 44,000 for the first time. The S&P 500 and the Nasdaq both closed just above the flat line. The S&P 500 managed to close above the mark of 6,000, and it is shares of banking stocks like Goldman Sachs, Bank of America and Citigroup surging over 2% each that contributed to the gains in the Dow Jones, because they are hoping that Donald Trump's return to the White House could lead to easier regulations on the banking sector. Now, investors also await to see how Wall Street could perform under President-elect Donald Trump. Listen in to Jeremy Siegel, the professor at the University of Pennsylvania, who shares his views on this.
Trump is the most pro-stock market president we have had in our history. He measured his success in his first term by how well the stock market did. So, you know, it seems to me very unlikely that he's going to implement policies that are going to be bad for the stock market.
And that's all we have on the global market front. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in focus this morning. First up, Vinny joins us to get us all the market cues we need to watch out for. Vinny, good morning. A tinge of caution this morning. What's the trade setup looking like?
Good morning, Horma. So we are keeping an eye out, and a caution start is what we're expecting. A bit of a muted start for the Indian markets. Now, yesterday what we saw was a very volatile day that actually came in for the Nifty. At one point of time, it was trading comfortably in the green, and then we saw that fall coming in the second half of the trading session. So volatile Monday came in, bit of Monday blues that you could say for the Nifty, because it managed to close with cuts of around 6 points, so down 0.03%. So very flat close that came in for the Nifty. Not much of an excitement. What dragged it was Asian Paints. The numbers that came in from the company was weak. M&M, Britannia, Apollo Hospital, Cipla, all of them were dragging the Nifty 50. Nifty Bank, on the other hand, that saw a bit of an outperformance coming in. It snapped its 2-day losing streak, and what led to the gains for Nifty Bank was ICICI Bank, Axis Bank and HDFC Bank. So these top private banks were something that was buzzing in trade. So keep an eye out on Nifty Bank today and how that is going to be performing. Will that momentum sustain for Nifty Bank is something to watch out for. FII continues to sell around 31 sessions that we've seen seen that FIIs have been selling, while DIIs have actually been net buyers this time. So that has continued as a trend. So we will be watching out more in terms of the flows that come in from the FII front. Obviously, we'll have to watch out for listing day today. We are watching out for Segality, which is listing today. We have earnings reactions that will be coming in from Britannia, NMDC, Hindalco, as well as Hindustan Copper, I beg your pardon, as well as Shree Cement. And earnings today that we're watching out for, MedPlus, we have Samvardhana Motherson, Natco Pharma among some of the earnings that we should keep an eye out on. But a muted start, what we are expecting for the Indian markets.
We'll see if that muted start sustains as well. Vinny, thanks a lot for that. Over to Upasana now, who will list out the stocks to watch out for this morning. Upasana, good morning. What's on your list?
Good morning. First up, let me start with Hindalco. After Novelis' disappointment, India business does well and revenues up about 7.7% on a Y-on-Y basis. EBITDA margin stood at 12.3% versus 8.3% on a Y-on-Y basis. Now coming to ONGC, the revenue was down about 4% and margin stood at 50.3%, slightly below the CNBC poll estimate of 51.7%. Next up is Shree Cement. Despite top-line miss, numbers were broadly in line with expectations. Margin stood at 15.9% while we were working with a poll of 15.9% itself. Next up is Britannia. Company reported a good revenue growth, but EBITDA misses the estimates. Company has reported a 8% volume growth versus expected range of 8 to 9%, and margin stood at 16.8% versus the poll of 18.9%. Now, Ramco Cements will also be in focus. EBITDA beats the estimates. EBITDA margin stood at 15.8% versus the poll estimate of 12.6%. NMDC will also be in focus. Top line a little higher, but margins overall a miss. Revenue stood at 4,918 crore versus the poll of 4,681 crores. Margin stood at 21.2% versus poll of 35.7%. Hindustan Copper will also be in focus as the company's reported in numbers. Revenue up 36% on a one-web basis. Margin stood at 29.3% versus 31.7%. Bank of India overall has reported a mixed set of numbers. NII is up about 4% on a one-web basis and down 4.6% sequentially. Jubilant Foodworks will also be in focus. Results are largely in line. Margins stood at 19.4% versus the poll of 19.5%. And lastly, L&T Technology will also be in focus as companies signed a definitive agreement to acquire IntelliSwift for $110 million. So all these stocks will remain in focus today.
Keep an eye out on all of them. Upasana, thanks a lot for that. Lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. Just not able to sustain at higher levels, isn't it, the Nifty?
Well, it's not able to sustain at higher levels, but the good part is that, it is finding support at lower levels as well. And yesterday, the two batters did extremely well for the index, and that I'm talking about the Nifty Bank and the Nifty IT. So both of them come up for you along with the Nifty. The Nifty was absolutely flat, but look at the Nifty IT up 1.3%. The Nifty Bank as well led from the front with a gain of almost 2/3%. The Nifty Bank in yesterday's trading session crossed past the 20-day moving average and found some resistance at the 50-day moving average. So that's something we'll be watching out for starters. And the Nifty IT index itself crossed the 50-day moving average. So with all of this and a positive start for the GIFT Nifty, one feels a little better about the markets in this week than they felt in the last week itself. The only fly in the ointment is the broader markets. The advance decline ratio yesterday worsened towards the second half of trade, with nearly 1,800 stocks declining for about 750 stocks which were advancing itself. But the good part, the FII selling abated a little bit from that 4,000, 5,000 crore daily selling. The FII sold about 2,300 crore in cash, matched dollar to dollar by the DIIs, and they also bought a few long positions in index futures. Nothing really to write home about, just a 335 crore purchase, but it isn't excessive selling here as well. They're still 75% short, 25% long, so that's something we'll keep an eye out on. At lower levels, the 24,000 put writers have been pretty active, as have the 24,100 put writers, telling you that around 23,950 to 24,000 there would be support for the frontline index. On the way up, however, upwards of 24,350 and 24,450, where we saw supply yesterday, could continue to be a bit of a congestion zone. For the market to come out of its current sell-on rally sort of mode, the Nifty has to formidably cross both the 20 as well as the 50-day moving averages. We'll keep an eye out on that. Also watch out for the financial services index. Today is the financial services expiry, the penultimate expiry for the financial services after, it expires next Tuesday. And we'll keep an eye out on Aarti Industries and Hindustan Copper, both those stocks in FNO band.
Mangalam, thanks a lot for that. Some important levels to keep an eye out for on the Nifty on the financial services expiry day. Time for a short break, but as we do that, here's a programming note. As CNBC TV 18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC TV 18 Global Leadership Summit. On the 14th of November, starting 10 a.m. onwards, a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more, only and only on CNBC TV 18. Welcome back, and earnings reactions. We're down to the final leg of the earnings season, and earnings reactions coming in thick and fast. Hindalco, Britannia, ONGC, all of them reporting results, and we have our research team to take us through all of this on Tuesday morning. First up, starting off with Nigel after Hindalco's results with the fine print. Nigel, how do the numbers look like?
Well, the numbers look good, and in fact, the stock has been weak in the last few sessions because of Novelis. But the India business looks very, very good. So in terms of an absolute number, the EBITDA, the absolute EBITDA was much better than what we were working with. It was much better in comparison on both the parameters. So if you look at the aluminium business, it came in at around 3,900 crores odd. That compares with around 3,274 crores that we were working with. And the copper business as well, much better. On the aluminium business, the reason for the beat was input costs were low and aluminium prices were higher. Also, they would have got some kind of impact owing to the profitability of the alumina business. On the copper business, we'll have to check out how exactly did this beat come about. The management has been telling us here on CNBC TV 18 that the EBITDA for the copper business on a quarterly basis should be around 600 crores. But they've delivered numbers much better than that. Now, in the past quarter, the volumes are down close to 10%, yet the copper EBITDA looks much better. So we'll require some clarity on that front. And the aluminium upstream, just take a look at that. Beautiful looking screen out there. The EBITDA per ton has moved to around $1,350 per ton, which is much better on a sequential basis as well as on a year-on-year basis. Copper as well does well, and the net debt more or less stable. So because of the recent underperformance, I expect the stock to do well in today's trading session. Back to you.
The bulls would definitely hope for the screen to look as beautiful. Moving to Britannia now, who reported good revenue growth for the second quarter running. However, EBITDA were a miss on expectations. Mangalam, how do the numbers look like?
Well, it was good revenue growth. If you look at the volume growth for Britannia this time around, 8% versus expectations of 8 to 9%. Second quarter of, an 8% volume growth, and makes it among the best volume performers in this quarter itself. But that's about the outperformance. The EBITDA actually missed estimates. So if you look at the overall numbers, 4667 on the top line versus street expectations of 4700 odd crores, largely in line. The EBITDA was a near 15% miss. The margins came in at 16.8% versus expected 19% numbers as well. And as a result of which, the bottom line was a miss as well. What led to the EBITDA miss? The gross margins came in lower by about 150 basis points, and the employee expenses also increased by about 150 basis points, leading to a 300 basis points decline in the EBITDA margin. The management did speak about tepid consumer demand scenario in most FMCG categories, but they were fairly tactical in that. Additionally, the company has also, appointed Jahangir Nusli Wadia as the additional non-executive, non-independent director. So that's a positive. We'll keep an eye out on that. The stock saw a sharp sell-off yesterday, so may have a good day today. Results 50-50. Stock reaction may actually be a good day.
May actually be a good day. We hope for that, Mangalam. Thanks a lot for that. And on to ONGC now. It was a largely inline second quarter. Sonal is here to give us the key highlights. Sonal, good morning.
Good morning, Hormaz. Well, yes, it was operationally an inline set of numbers. Profits were higher, but that is because of lower depreciation and higher other income. If we compare it with the poll, largely in line, 33,881 crore rupees of revenues, EBITDA at 17,025 crore rupees. We were working with a number of 17,200 crore rupees, but the beat really came in by 3,000 crore rupees on the PAT level, which came in at 11,984 crore rupees. On a quarter-on-quarter basis, the numbers suggest that revenues are down 4%, EBITDA is absolutely flat, margins have improved to 50.3%, and profits are up 34%. That's because the other income has doubled to 4,765 crore rupees, which compares with a number of 2,061 crore rupees on a quarter-on-quarter basis. Now to some positive update, and this is something that the investor community is watching out for. The company said they started 3 new oil wells in the KG Basin in late October, which has led to crude production rising or doubling to 25,000 barrels per day versus 12,000 barrels per day that they reported in the month of August. And they will also open 5 wells shortly. So investors were really concerned about what happens with the KG Basin production. That has been taken care of. Production right now continues to decline, but it's something that the street was working with. 2% down on crude production, gas production down 3% on a YY basis. We have the conference call at 3:30 p.m. today. We'll get in more in terms of production guidelines from the management and especially from the KG Basin because that continues to be the focal point.
Sonal, thanks a lot for that. Keep an eye out on these 3 Nifty names reacting to results. Time for a short break. Up next, we get your cues from the commodities market. Stay tuned back on the other side. Back with us here on Power Breakfast, shifting focus to some data from the Income Tax Department. Now, India's net direct tax collection grew 15% on a year-on-year basis to 12.1 lakh crore rupees during the April to November period. Now, the gross collections saw an up move of 21.2% to 15.02 lakh crore rupees for the same period, which is until the 10th of November. And securities transaction tax, or STT, almost doubled to 35,923 crore rupees as compared to 18,909 crore rupees in the same period last year. On to CNBC TV 18 exclusive. Then the government may consider relaxing cash management guidelines in the fourth quarter of the current financial year. Now, this could relax expenditure caps traditionally enforced in the January to March quarter. Now, sources say that a final call will be taken once the ministry studies the expenditure numbers. Sapna Das is here with more exclusive details. Sapna.
Well, it's just possible that the central government may not reimpose the expenditure caps that they generally do in the last quarter of the financial year. Generally, ministries and departments, they are not allowed to spend more than 33% of their entire budget estimate for the year in the last quarter, that is Jan to March, and also 15% cap is there on their expenditure for the month of March alone. Well, it may just be possible that these caps are not revisited by the government as it happens every year during that time. And the reasons are pretty much clear. Expenditure has been on the lower side. The numbers are pretty evident. And so is the capex. The capex number particularly needs to be highlighted. 37.3% of the budget estimate spent in H2 in comparison to 49% spent in the last financial year. Of course, there are reasons which are well known, but the trend doesn't seem to have come off. So that's one. The second aspect also that we need to keep in mind is that the state government borrowing also has been on the lower side. Of course, the fact also remains that central government devolution has been very liberal. Over 65% has already been released to the state governments. But there is a huge borrowing gap in terms of the target and what they are actually availing for the market. So this also probably could be indicative of the fact that not much expenditure or not much spending is happening at the state level. This also needs to be looked at. The central government, of course, is optimistic that they will be able to meet all their targets by the end of the financial year. But it remains to be seen whether that comes through. There is some indication from these numbers and this trend at the moment that the central government may actually miss the 11 lakh crore capex target for the current financial year.
Sapna, thanks a lot for that. And over to Manisha Gupta now, who is joining in with all the updates from the commodity space. Manisha, good morning. Crude prices continue to cool off.
Well, yes, Hormuz, it's not a pretty sight when you look at commodities. The risky asset seems to be doing well, but not commodities. The markets are sitting and watching for what Trump comes in sense of policies, what would be the impact of that, and what would be the impact on oil and gas as a segment as well. And to add to all of these things, you have China demand concerns, the strength in US dollar just about continues, and then the 2025 as an year is projected to see supply growth from OPEC and non-OPEC as well, and that has continued to put pressure on crude prices, which declined 2.7% overnight. The pressure has continued for metals as well. Gold is trading at 1-month lows. Silver is trading at a 2-month low. The strength in US dollar is bothering the base metal prices also, where you have copper prices now trading at 2-month lows, aluminum 3-week lows, zinc 6-week lows. Well, the only thing that seems to be gaining is one, regional equities, second, US dollar index, and third, Bitcoin, where we are very close to 90,000 as we speak.
Multi-week lows for commodities, but one-way rally continuing for Bitcoin. Manisha, thanks a lot for that. And with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call up next to set you up for today's trade.